Now, for the past 7 days, Mr. Price shares are up over 8%, whilst in the last 52 weeks, the shares are up over 32%. Now, the reason why Mr. Price shares, ladies and gents, are up over 8% in the last 7 days is because they just released their full year earnings ending in March of 2024. This is something that is pretty exciting because Mr. Price saw their revenue jumping up by over 15% or 15.5% increase, which is something that is pretty exciting because remember, when we are investing into the stock market, we are investing in companies who at least see their revenue growing over the years or with years, which shows a good sign of growth. So those revenues that Mr. Price generated, ladies and gents, represented a 15.5% increase as compared to the kind of revenues they reported last year around the same time. This is a good sign. This is why the shares of Mr. Price on Friday, when the market closed, they were up over 6%. Now, I personally don't own this stock. I don't own these shares, but when I saw the 6% or plus 6% jump on the share price, I wished I owned this company. But one thing for sure is that you cannot own all the companies in the stock exchange or in the JSE. But of course, when you see such moves being made by big companies like Mr. Price, of course you wish you owned the company. I mean, their profits increased by 6.1%, while their headline earnings increased by, ladies and gents, 6.7%. So it is with no doubt that this company, ladies and gents, is doing so well. I mean, the good thing is that even when you look into the future, this is the company that is still expected to grow because analysts are expecting this company to continue growing their revenues by 5.7%, whilst the earnings per share is still expected to grow by over 11%. So profitability is expected to grow by over 11%, which is something that, of course, it is pretty exciting. And this, ladies and gents, it is for the next 3 years. So for the next 3 years, revenues are expected to grow by 5.7%, earnings per share to grow by, of course, 11.5% per annum for the next 3 years. So every year they're expected to see some good growth, which, of course, looking at how this company is performing, I think it is a no-brainer that this is a good stock to own for the long term because it is still expected to grow. But one thing that you also need to check, or one thing that to me, of course, now it is making me to be a bit reluctant maybe to buy and maybe wait, I don't know, for the share price maybe to at least cool down, is of course their PE ratio, which is currently just over 17. And if you look into the industry average, you will notice that the Mr. Price in their industry, they are one of the companies that are having a higher PE ratio as compared to the other companies. And that might mean that at the moment, because of the huge jump maybe we saw on Friday, they might be slightly overvalued. Whilst this, I know to some it might mean it is a company that is doing well and expected to do very well. So yeah, as it stands, for me for now, maybe I would just like to put this company on the watch list and see how their shares are performing, because I believe that for now I'm a bit too late, and maybe I will see, maybe before earnings report, maybe we see or get an opportunity to buy this stock. But one thing that you must note is that companies are doing pretty good, pretty well, I think more than what some of the people expected now, because one of the things that people thought they will be seeing is companies struggling because of high inflation and high interest rates. But we are seeing companies, ladies and gents, regardless of the current economic conditions, doing so well. Especially in the retail space, we are seeing companies doing exceptionally well. I mean, ShopRite is another example of the companies, or some of the companies that are doing well. So we are seeing companies performing much better than previous years, which is something that is always commendable, something that is always good. And imagine the kind of growth, the kind of earnings that we'll see this company reporting when interest rates have come down and they are now back to average. This is something that, of course, will continue, of course, fueling making consumers to want to spend more, because they won't be worried about high interest rates, high inflation, because it would have stabilized. And by the way, interest rates are expected, or analysts expect interest rates to start decreasing by the end of this year, meaning that probably by the end of this year, ladies and gents, we see these companies generating even much better revenues or even more revenues than the kind of revenues they are generating now. So Mr. Price, yes, it is a company that I must say they are doing well. I wish I owned this company, but I don't. But no, it's not a train smash, man. But of course, I just thought I'd just give you this quick updates, especially those that are investing or maybe own this stock, and explain as to why the shares of Mr. Price ended the day on Friday up over 6%. But you know that this is not financial advice. None of the information that I share here is financial advice. These are just my opinions, analysis. But of course, if you seek professional financial advice, you know what to do, and that is you need to go out there and consult the professionals. Otherwise, with all that, guys, I just thought I'd just give you this quick update. If you enjoyed this video, don't forget to hit that like button, comment and subscribe. And once you subscribe, don't forget to hit or click that notification bell so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.